Biden won the US presidential election, but the blue wave predicted by pollsters didn't materialize. Although there's a runoff for 2 Senate seats in Georgia in January, it's extremely unlikely that the Democrats can get control of the Senate. Markets tend to like this sort of deadlock since it means no extreme policy moves are likely. Biden's massive fiscal and stimulus plans and higher corporate taxes are unlikely to be enacted. Trump's legal attempts to overturn the election result, although with little hope of success, may delay the extension of state aid to furloughed workers until the new year. That means unemployment rising and consumer spending falling in the final quarter of this year as COVID continues to spread. The elections also showed how polarized the nation is. Because Republican members of Congress largely owe their seats to Trump's nationalistic policies, that's likely to continue. So what can Biden get done by executive orders? He will probably get a proper COVID task force going fast. He will recommit to the Paris Climate Accord and promote a clean energy policy. He'll also recommit to NATO and rejoining the World Health Organization. He can reverse immigration policy, allowing more immigrants and more foreign students whilst stopping funding for the border wall. There will be a stimulus package, but it is likely to be a lot smaller than originally thought and largely dictated by the Senate. Still, Biden will adopt a more conciliatory approach to international affairs and get buy-in from allies rather than alienating them. Again, that's also market-friendly. US-China relations are unlikely to improve, but at least they will be less by decree and more by international cooperation. In the UK, we still have Brexit to contend with. Our departure from the European Union will take place at the year end, and we're of the opinion that some sort of deal will be reached, but that any deal and any exit from one of the biggest trading blocs in the world is a negative for the long-term growth outlook for the UK. So moving on to the really big news from the last week, and that is the vaccine from Pfizer. It has a 90% success rate, exceeding the most optimistic assumption. Questions remain, storing it at -80 degrees centigrade, efficacy in older age groups, will people want to get it? And how long does immunity last? Still, other vaccines are coming. 11 are in stage 3 trials, may even be better. A lot of these can be mass-produced quickly, so we can expect hundreds of millions of doses by next spring. So this isn't a 2020 impact, and inoculating several billion people will take time, but we may be getting back to normal in H2 of next year. In the meantime, the much-feared COVID second wave arrived in October in developed markets. Particularly badly hit are the US and Europe, and the US has averaged over 125,000 cases a day, and the Europeans as a whole have averaged over 170,000. Death rates are rising. And that means that the very high hurdle for additional lockdowns has been reached. Health services are in danger of getting swamped again. So that means that it is now likely that Q4 growth will stall and be slightly negative. Less damaging than the initial lockdown though, as they are more targeted, so large parts of the economy remain open. And critical care and protection equipment have improved as well as track and trace. Still, the vaccine is a game changer. Although we anticipated delivery by spring next year, this is now a certainty, and the initial vaccination campaign may start earlier. The market reaction has been to support stock markets and riskier assets as they get back to normal. That also means moving out of growth stocks, predominantly tech firms that benefited from COVID, into value and cyclical businesses that have been hurt by COVID. Increased risk appetite supports smaller stocks versus larger stocks too. Now our portfolios, as you know, have already been repositioned for this outcome over the last 7 months, and we expect that to produce returns that build on the success of this year in navigating the crisis. My colleague Michael Usher will go into our portfolio actions in the next podcast. In the meantime, I'd like to thank you for listening and for your continued support. Until the next time.